Welcome to this explainer. Today, we're diving into what has to be the absolute strangest, most circular financial loop fueling the entire AI boom right now. Honestly, if you thought you understood exactly how the AI economy worked, you might want to prepare to have those assumptions completely flipped upside down.
So, who actually controls the machines building our AI future? You probably guess it's the massive tech giants, right? I mean, they're the ones building the superintelligence. But there's a huge twist here. What if I told you that the very companies building our future don't actually own the hardware they're building it on?
Get this. Almost none of the companies racing to build superintelligence actually own the machines they're running on. None of them. Instead of buying the servers and the GPUs outright, these massive AI labs are just renting them. And increasingly, in a really bizarre twist, they're actually renting them from each other.
Which brings us to a slightly clunky new buzzword you need to know, the NeoCloud. Basically, a NeoCloud is an AI-only hyperscaler. It gives you GPU as a service without all that legacy baggage you'd find in a traditional general-purpose cloud provider. Now, this entire category basically exploded out of pure desperation. Back during the severe GPU shortages of 2024 and 2025, companies were stuck on wait lists for months. Renting just became the only viable way to scale up fast without spending 4 years building new data centers. And out of that sheer desperation, a massive new landlord class was born. $55 billion. That is the staggering contracted backlog for just one company right now, CoreWeave, the absolute giant in this new NeoCloud space. And that massive number is fueled by some seriously enormous commitments. We're talking about Meta committing something like $35 billion across a couple of deals, and OpenAI roughly $22 billion. And there are over 100 more of these NeoCloud companies right behind CoreWeave, all renting out essentially the exact same hardware. And it gets weirder, because this creates a dynamic where even the full-stack integrated frontier labs are becoming landlords themselves. Take XAI, for example. In May 2026, they took their massive Colossus 1 supercomputer and actually leased it out to their direct rivals. Anthropic is paying about $1.25 billion a month, and Google is paying about $920 million a month. Why? Well, because XAI's own training had moved elsewhere, and their cluster was just sitting there at a remarkably low 11% utilization rate. When a lab whose whole strategy is about vertical integration just hands its capacity over to rivals, you know the market has shifted. Ownership has completely decoupled from use.
The trillion-dollar loop, following the cash. To really understand how this cartel operates, we've got to play detective and follow this massive flow of cash all the way back to the source. $1.15 trillion. That's OpenAI's estimated compute and hardware commitment over the next decade alone. A trillion, with a T, all committed to building the AI future. When you break that astronomical sum down, you see some massive vendor commitments. We're talking roughly $350 billion for Broadcom, $300 billion for Oracle, $250 billion for Microsoft. But analysts point out a glaring reality here. OpenAI absolutely does not have $1 trillion to spend. They certainly don't have $300 billion in cash just sitting around. So where on earth is all this money actually coming from?
Well, here's the crazy circular financing structure keeping this whole thing afloat. Increasingly, the money comes from the suppliers themselves. Step 1, suppliers invest billions into the AI labs. NVIDIA, for example, agreed to invest up to $100 billion into OpenAI. Step 2, the labs take that exact investment money and use it to rent compute or buy hardware from those very same suppliers. And finally, step 3, the NeoCloud landlords take that rent money and go right back out to buy more chips. So NVIDIA is effectively bankrolling its own future sales. Money, chips, and cloud credits just constantly rotate among the exact same dozen names. Stripping away the PR, 3 levers of control. Once you look past the press releases, where does the real power actually concentrate in a circular ecosystem like this?
It all boils down perfectly to 3 main choke points, or levers of control. First, you've got NVIDIA, sitting way upstream of everyone else. Second, you have the NeoCloud landlords, who control the actual rental contracts. And third, you have capital, the tiny handful of private credit and venture firms who are actually large enough to write the 10-figure checks keeping this entire loop spinning. Let's zoom in on that first lever for a second, the sheer math of NVIDIA's unparalleled dominance. If you build a gigawatt AI data center, it costs roughly $50 billion. Out of that $50 billion, NVIDIA captures about $35 billion. They capture the vast majority of nearly every dollar spent, they hold equity in the firms doing the building, and most importantly, they control the chip allocation.
In a totally supply-constrained market, the company that decides who gets the GPUs is literally the company that decides who gets to compete. It is the ultimate upstream choke point. Then you have the landlords themselves. Remember, when you rent, your compute lives on someone else's terms. Take that massive lease between XAI and Anthropic we talked about earlier. Reportedly, XAI preserved the right to reclaim that computing capacity if Anthropic's AI, quote, harms humanity. Think about the power dynamics there. That single clause turns a simple compute lease into a terrifying governance lever, held directly by a major competitor. Your access to the very engine of your business is entirely revocable. The fuse, a fragile house of cards. The exact same circular setup that makes this whole cartel so incredibly powerful, yeah, it also makes it ridiculously fragile. $3 trillion. According to Morgan Stanley, that's the estimate for global data center spending between 2025 and 2028. And here's the crucial detail. About half of that is funded by private credit. It's debt. A loop where suppliers finance customers to buy from suppliers works beautifully as long as demand and stock prices just keep going up. But it can unwind in reverse just as fast. And to turn up the tension even more, look at the financial reality of the actual AI labs. $74 billion. That is OpenAI's projected operating loss just for the year 2028 alone, and that's against an estimated $140 billion in cumulative losses leading up to that point. The spending on compute is monumental, but the revenue simply isn't keeping pace. Because the real fuse here, it's the end consumer. We have literally trillions in infrastructure spending on one side of the scale, but by one count, only about 3% of consumers are actually paying for AI. That translates to maybe $12 billion a year, stacked up against trillions in spending. The foundation of this entire circular loop relies on consumer demand that is frankly shockingly thin. And honestly, the cracks are already starting to show. H100 rental rates have plummeted 60 to 75% from their peak. That is the ultimate undeniable proof of commoditization. If one major node in this loop wobbles, if a lab misses a milestone, if consumer demand softens even a little further, or if a financier just blinks, the loop won't just gently deflate. Every single canceled order becomes someone else's missing revenue and impaired collateral. The whole circular structure can rapidly definance itself. How to survive the squeeze. So if you're a company trying to build on top of this wild, unpredictable foundation, what do you do when the cartel inevitably pulls its levers? Here's your actionable survival guide. First, run your own inference wherever the economics actually allow it. Owning the physical box you serve from is the one part of the stack that absolutely nobody can magically reprice or take away from you. Second, always keep an open weight fallback model that you can host yourself if you suddenly get cut off. And third, aggressively diversify your silicon. Look into TPUs, Trainium, and AMD so that a single allocation desk at NVIDIA isn't your single point of failure. Ultimately, you just cannot be a pure price taker at the bottom of a circular structure you don't control. This entire boom has taught the AI industry to rent the machine. But let's look ahead and leave you with this final, absolutely vital question. As compute completely commoditizes, who controls the one crucial input you absolutely cannot rent? I'm talking about proprietary data. That is for sure the next big battleground, and it's hiding right in plain sight. Keep an eye on it. Thanks for joining me on this explainer, and keep asking the right questions.